Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Monday, May 18th. The decline in trade remains a serious impediment to righting global economies. The recently released March U.S. trade data reflect the problem. Since July, U.S. exports have declined 23.4%. It's a 35.1% annual rate. Non-petroleum imports have declined a similar 23%, or at a 34.5% annual rate. Trade is plunging. The impact on the U.S. is not as severe as on other countries because trade is less of the overall economy. Furthermore, the decline in imports means that consumer spending is more oriented toward domestic output. That has the mathematical effect of boosting GDP relative to the consumption numbers. The decline in exports, however, is clearly bad for U.S. businesses as overall trade declines. The impact of declining U.S. imports is also having a severe impact on other economies. Data released Friday showed that the European Union suffered a record decline in quarterly GDP. For the first quarter, real GDP in the EU fell 2.5%. Now, the EU uses quarter-to-quarter changes, whereas the U.S. annualizes the change. The EU first quarter decline is equivalent to a decline in U.S. GDP of 10%. This follows a decline of 1.6% for the fourth quarter in EU GDP, which is a U.S. equivalent annualized decline of 6.4%. The plunge in European economies is of extreme concern. The weakness is magnified in economies highly dependent on trade. For example, the German economy fell at a 15.2% annual rate. The trade concerns are heightened by protectionist trends. The U.S. earlier this year canceled a program to allow Mexican trucks to transport in the U.S. Mexico retaliated with tariffs on 90 U.S. goods. The stimulus package has also raised concerns because of efforts to direct resources toward U.S. companies, and free trade agreements with Colombia and Panama remain stalled. The global recession has countries leaning toward protectionist policies rather than toward free trade. This will prolong the recession and restrain the recovery. There are signs that economic conditions are stabilizing, but it is imperative that global trade picks up for a global recovery to occur. I'm Pat O'Hare for Briefing.com. Thanks for listening.